Now, traders, can you see my screen before we proceed? Can you see my screen? All right.
Yes.
Now, in the last class, I told you traders that there are three types of chart patterns directions. We have chart patterns to trade for continuation of a direction in the market trend, and we have the reversal chart patterns, and we have the bilateral. When something is bilateral, it means it can either break to the upside or break to the downside. That means it has two possibilities. When something is reversal, it's either it reverses the uptrend to a downtrend or the downtrend to an uptrend. And when something is continuation, it means it continues, it keeps on going in the direction. If it's a downtrend, it keeps on going in the downtrend. Now, these are three major ways in which chart patterns can exist. Now, in our last class, I said we are going to dive into what? Into the continuation as a beginner trader, because as a beginner trader, you need to start your trading based on continuation concept, because it is easier to make money in a trending market. When we say trending market, we are referring to what? A market that is doing what? Repeating higher highs, higher lows in an uptrend, or a market repeating lower lows or low highs in a downtrend. Right? Okay. Now, let's wipe out this and this. So let's start with continuation. Now, based on continuation, I showed you in those slides, I said we are going to dive into different continuation patterns, and I divided my board into different let me divide this board right here, and this and this. So we have the first pattern on our list. Now, I told you that we are going to start with uptrend market. Uptrend market, right? So in an okay, let me just wipe this out. I want you guys to understand this concept right here. Let's just wipe this. Yes. Now let's do this. Let's do this. No, come on, this is too wide. Let's put it here. And let's put it here. Now, I told you that we are going to start continuation of uptrend market. All right. Now, I told you that in an uptrend market, we are looking for market repeating higher highs, higher lows, higher highs, higher lows. This is what we want in an uptrend market, right? This is an uptrend market. So in an uptrend market, higher lows, higher lows, higher lows, higher lows. I will repeat that so that you guys can understand that we have already done what uptrend market is all about. So we are not going to spend much time on this. You can see that higher lows, higher lows, higher lows, higher low. The next low is higher than the previous low, and the next low is higher than the previous low. Now, at these higher lows, this is where we want to see what? Continuation patterns. So this means at the end of a corrective move, we should start looking out for what? Or continuation patterns will form at the end of a corrective move in a trending market. Now, this red swings is corrective. In an uptrend, the bearish movement is the corrective swing, and the swing in direction of the market is what? Is the impulsive swing. Impulsive swing, impulsive swing, impulsive swing. Impulsive swing are the green swings. You can see that. Now, as the market keeps going up, the impulsive swing will be longer than the corrective swing. The corrective swing will be shorter and be weak, and the continuation pattern will give the end of corrective swing. Now, the type of pattern we should be looking out for when a corrective move is about to come to an end is what? Are continuation patterns like double bottom, triple bottom, inverted head and shoulder, falling wedge. I will draw this channel in a different place. Rounded bottom, falling channel. Another good example, we have the inverted cup or cup pattern. We have lots more. Which other one do we have? Can someone give me more examples of the other ones we have? Ascending. When we have it round, we have it this way. No, ascending are majorly good for reversal, but they can be used as, yes, they can be used. Yes, they can be used. When the market comes down, it goes up. Yes, ascending triangle can be used. Ascending triangle. And which other one again? Rectangle can as well form, but I'll prefer to put this under the bilateral, because the market can dip down like this and then range like this and then go up and continue up. So rectangle can also be used. They can also be used. Rectangle can also be used. So let's just put it there. Let's put it there. Ascending, rectangle. Which other one can we put right here? Do we have any other pattern you know of? I know there are still more, but let's just choose this one right here as something we discuss later. Because this pattern right here are bilateral, so I wouldn't want you to put it under the continuation. This is bilateral, so let's just remove this, because advanced traders, experienced traders can trade this for continuation, but as a beginner trader, don't use this. Let's just wipe it out so that you can be on the safe path. This as well is good for reversal. So as a beginner trader, you can use the ascending triangle, which means the market is coming down and then get to a point, it starts giving you something like this and then goes up. So we have it like this. Alright, it can also work. That is also good. So let's leave it. It's acceptable. But that rectangle, no, I don't want you to treat it because it's a complex. You need a lot of factors. Now, we have the double bottom, triple bottom, inverted head and shoulder, breakout of a narrow wedge, falling wedge, double bottom, a channel. We also have the pole. We have the pole like this, bullish flat. The market comes up, then give us a pole like this. But this bullish pole is also a combination of this channel. So the market goes up and then ranging and then break out. So this is also a continuation. This is a good continuation pattern. We also have the pennant. It goes up this way. It gives us a something like this up. Which other ones can we put? We still have more. I want you to tell me samples you know. Of course, there are other advanced ones. Something like this. These are advanced ones. We are still going to talk about this, but this is under the advanced section. We have another one like this. These are advanced patterns, so we talk about this. For now, just stick to the regular ones or the simple ones. Alright, now this I will mark the breakout point. This is the breakout point, the breakout point, the breakout point, the breakout point. The brim is the breakout point of this fry pan or rounded bottom. The breakout point around this level. This as well, the breakout point here, the breakout point here, the breakout point here, the breakout point here. Now let's see, we have some late comers. We always have late comers. We must always have late comers. There will always be late comers in the class. There will always be what? Late comers in the class. Let me just try. Hang on. I want to share some things. Hang on. Hang on. Just hang on, traders. I'm trying to modify some things. Now, okay, let's get back to the board. Now, as price is coming from this level, let's use the green. Price breakout at this level, confirmed. At this level, confirmed. At this level, as it's coming out, breakout, confirmed. Price went through this medium, it breaks out, confirmed. Confirmed. Breaks out, it goes through here, bam, 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 bam. Breaks out, confirmed. Goes, confirmed. Goes here, confirmed. It goes up, give the pole, goes here, confirmed. Give us the pole, goes here, confirmed. You can see that. Now, we are going to discuss all these patterns. This is going to take off for like maybe 2 or 3 weeks. Yes. I want to educate you on the right, proper way, professional way to approach this pattern, because each of these pattern right here can be used to formulate, to build an effective, simple trading strategy. I am not just going to rush you into this for the sake of creating content, blah blah blah, blah 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 blah, jargon, ulambalu, and I say that is all. Thank you. No, I want us to know the factors which is needed to trade double bottoms. No, during my years of trading, I've heard different stories from different traders that chart patterns do not work. Chart patterns do not work. When they say this, it's always amazed me that chart pattern does not work. How? By the time I involve them in deep conversation, I discovered that they only understood the periphery, or the simple concept of these patterns. There are factors you have to combine before you can trade patterns. I am saying this again, and I'll keep on repeating this. Chart patterns work, and I can defend this to any extent. The reason why it doesn't work for some traders is because they are yet to understand the real in-depth concept of chart patterns. There are factors that has to be combined before you trade chart patterns, such as volume. In fact, if you want to trade chart pattern strategy, if you do not understand the concept of volume and momentum, please, I'm begging you, just don't trade chart patterns, because chart patterns will disappoint you. You will lose your money, you will blow your account, and you will later turn or join the gangs or the group of people that say, or traders that say that chart patterns doesn't work. Chart patterns work, but before it can work, there are factors you need to understand before you can trade them. Let me tell you the reality about chart patterns. Out of 100% of chart patterns that form in the market, 85% of chart patterns are fake. They are trap. They do not worth it or they do not worth to be traded. Now, if you understand the concept of these chart patterns, you will know how to avoid this 85-80% of this fake concept. Some of these fake factors you need to know is trading chart patterns on the lower time frame is a no area, because most of the, I have series of examples I can show you on a price chart today which I check out based, I know, okay, let's go back to what happened in the community today. Let's make reference to what happened in the community today. So in the community today, some traders sold British pound sterling paired against the JPY and they lost the trade, right? Now that doesn't mean the trader doesn't know how to trade, but let me show you something on the lower time frame. That's something I want. Okay, now someone bought this double bottom. After it broke out, it went range, it came down, but it is a double bottom, but it failed. So people try to do what? To sell this double top. It came down like it's going down, it went up again, hit their stop loss. Now this is a double bottom. Now this double bottom is reversing up, right? It's actually worked right here. Now if you zoom out on your price chart, you will see a lot of fake double tops, double bottoms, head and shoulders, right, flag, channel, everything just like that. Now the summary right here is, if you want to trade chart patterns, try to trade them on the higher time frame. That doesn't mean they do not work on the lower time frame. Now see what I saw right here. I saw a narrow wedge, a rising narrow wedge. It acted right here to the downside. I wasn't a scalper, but when they sent out their trading signals right here on the 15-minute charts, I was watching their action. They were trying to trade this pattern here. Let me show you what they were trying to do. They were trying to trade this as a what? As a rising channel. But I was seeing a narrow wedge. And what happened? Boom. You can see that. They lost that trade. I think I pressed something here. Oh. Okay, I survived that. Now, let me show you another examples. I took a trade on the New Zealand USD. I sent it to the community and everyone is in profit now. I only share the trade with my VIP students. So any trade I take, I send it to my VIP students. So those who are in the free community, let them keep on enjoying free things. And those who paid for the VIP, let them enjoy VIP goodies. So VIP students will enjoy VIP stuff and let free students enjoy free stuff. So if you are fortunate to be in my VIP community, congratulations. Profits rolling up on New Zealand USD. So congratulations. I told you how to add second position. It's already right there in the community. So those of you who added your first and second position, congratulations to you all. So those who opted into the VIP, they should have more benefit than those who are just in the free group. I need to be fair, right? Those who paid for the VIP, they should enjoy more quality things than. So let the free community. So in summary, the free community lost a lot of money on GBP yen today, but they made money yesterday. So congratulations to them. But the VIP students, I always share my trade with you, right? And any trade I see that is risky, I won't allow it to be sent to the community. But that doesn't mean that whenever you see a trade in the VIP community, that doesn't mean you shouldn't manage your risk, because there isn't any strategy which is affordable in the market. So Euro GBP, you guys are seeing profit right here in the VIP community. You guys are seeing profit. Euro GBP, you are seeing in profit. So if you are in the VIP community right now, your trade is in profit. All right. And the trade we took on Bitcoin, I mean the crypto market is still on. My trade on Saga is still on. Saga is still struggling up and down, but we make a significant amount of money in quantum. So Saga is still right there. So I will update you guys before 1 p.m. 1 a.m. Maybe we have to get out of Saga, right? So our time is up. we are late to the class. So in the next class, I will dive more into those chart patterns. So for now, just understand that in the next class, we are going to start with the double bottoms, and I'm going to teach you some of the factors we have to combine. Double bottoms. I already discussed the double bottom, but I discovered that most of us were not active in the class, and most of us were not even responding. Right? So I have to repeat this concept because this double bottom, you can actually use it to build a powerful trading strategy. Right? So, do we have questions? Mr. Odinaka took part of our class as stock class today. So we diversify into stock, we later come back into technical analysis. So that's one of the benefits of coming to the class early. If you're in the class if you come to the class early and no one is in the class, any question you ask, I'll give answer to it. So Mr. Odinaka took our time today on stock market because no one was in the class so early. So Mr. Odinaka have already took the class on stock market. So congratulations to Mr. Odinaka. Mr. Odinaka gained some things in the stock market today, even though he didn't enroll for stock market, he enrolled for Forex. So that is good. So do you have any question in the class before we put an end to this class? So VIP students, I will update you in the VIP community our next trading stop and stop loss and the next trade that we are going to take. VIP students, right? And those of you who are not in the VIP, who are just getting this opportunity right now, if you want to take the trade, make sure you manage your risk, right? Manage your risk, all right? So that is it. And if you like, jump in. If you jump in, you jump out. So if I can see another trade opportunity retracement level, I will share with the VIP community. So free group students, just keep on enjoying your free noodles, and the VIP students, special content for them, special noodles for them. All right, I will see you in the next one. VIP students, the batch, this is batch of September, right? This is September batch, right? So September batch students, I will see you in the next one on Friday, right? 9 p.m. GMT +1. Please, let's be early in the class. Let's stop lateness into the class. Congratulations to you all. I'll see you in the next one. Manage your profit, trade your profit, and watch out for the next trading setup coming up in the community. Right? Do you have question? Do we have question? No question. Expect a copy of this class if you are a VIP student. If you are a free student, forget about it.